we turn our focus to Best Emerging Market Equities Fund. The Oppenheimer Developing Market Fund ranks in the top 9% in the past year and 5 years against its peers. Justin Leverenz manages the $15 billion fund. He has more than 16 years of investment management and equity research experience, primarily in the emerging markets. Justin, welcome to Bloomberg News. Thanks for being part of our series. We appreciate it. Talk to me about the emerging markets. What is it about the emerging markets that is piquing people's interests?
Well, if you look at the medium term, the next 5 or 10 years, the story is really about the reemergence of the emerging markets in terms of significant parts of world GDP. You know, in the last decade, we've gleaned about 10% of economic wallet share of GDP output in the emerging markets. So now we're about a third of world GDP. In the next 10 years, it will probably be closer to half. So these are the growth engines of the world. I think that's the significant interest.
Growth engines of the world, meaning specifically what? Is this where people are going to be looking for to make their investments in the future?
Well, there are two things. There's economics and then there's stocks.
There's two schools of thought here.
Sure. But I think if you look at it from an economic perspective, particularly since we've had the last 18 or 24 months of distress in the developed world, and Wall Street has this propensity, largely incorrectly, to extrapolate, the enthusiasm is really about the near-term growth opportunities in emerging markets.
But why does Wall Street make that mistake? Why is that extrapolation so skewed?
You know, this is a long interest of mine, but I think it's related to compensation philosophy, which is, I personally believe most people on Wall Street don't believe they're worth the money they're making, and so they tend to be myopic and crowd followers because they're very worried about near-term performance.
All right. Let's talk about your fund. 5-star Morningstar rating. Talk to me about some of the things that you like here. Magnit is one. Why Magnit?
Sure. Well, my fund has a very different approach to the emerging markets than many. And I think if you look at the performance that you alluded to in terms of history of success, it's because we have a very different philosophy of investing in the world. We're not interested in countries, we're interested in companies.
And specifically about Magnit, it retails food and it owns and operates a chain of discount supermarkets. Why is that attractive to you?
Sure. Well, as I was getting to, the philosophy in Magnit, why it's 275 basis points of my fund.
Magnit, I apologize.
If you look at what I invest in, I'm all about exclusivity. I'm interested in companies with very unique economic characteristics. They're long-tailed, durable growth companies, and they've got companies with massive advantage.
You call Magnit the Walmart of Russia.
Correct,
Why?
Yes. Well, I make a couple of, shall we say, exaggerated comments about Magnit. One is it's the Walmart of Russia. The other, it's the only great company in Russia. You know, I own 2 companies in Russia. It's a very difficult place to invest. But the story behind Magnit is you've got durable, long-tailed growth associated with low penetration of organized retail. So you've got a very fragmented food retail environment. And as you have seen in other geographies, retail is a business that lends itself extremely well to massive advantage associated with scale. Yep. So you're getting a roll-up of the industry by 2 or 3 significant players, Magnit being the largest. The other thing that's unique about Magnit, and actually good retailers around the world, is that the advantage compounds through time. It's a business with very durable barriers to entry. And so you've got little Magnit, which is 3% of the Russian retail sector. And I think, you know, it will go from on the order of $5.5 billion of revenues last year towards $40 billion in the next decade.
Let's talk about a couple of others. Natura Cosmeticos. Sure. 5 buys, 12 holds, 4 sells on this. It produces cosmetics.
Sure. Well, I've been a long-term shareholder in Natura. You know, I bought most of the position 3 or 4 years ago. Natura is a very unusual company. It's the, if we're going to stay on this theme of, it's the Avon of Brazil. Now, Avon, of course, is a competitor in Brazil. But what I mean is it's a cosmetic company, but it's a direct marketing company. It's a very difficult business to manage because it's really about 2 issues. One is about managing a very large channel. So you're talking about over 600,000 sales agents that are outsourced at Natura. And then it's about innovation and brand. And if you look at the growth aspect, Brazil, of course, has normalized. And as a result of that, you're getting, like many of the other geographies, a significant critical mass of the middle class.
And Justin, if I could, in our last 30 seconds, I just want to get the last one in quickly. Anhanguera Educacional Participaciones. I'm sure I got it kind of in the ballpark.
Your Portuguese is probably as good as mine. But this is a long-term story associated with Brazil education.
Yeah.
Namely, the growth in the lower class moving into a more educated circumstance. And again, like we've seen in Brazil, whether it was Ambev or the retailers, it's really a roll-up story.
How significant is that in Brazil, that roll-up that you talk about from the lower class getting the higher education?
Well, in terms of migration up the pyramid, that's part of the great excitement about Brazil, is that the first time in decades you are starting to get mobility. And part of that is associated with normalization, which is nominal interest rates and inflation being controlled and good fiscal policy and all of that. But the other is partially about policy success, things like Bolsa Familia. In my education companies, efforts to try to increase private funding for potential college applicants.
Could I ask, as you look at the emerging markets funds and as you look at a global macro picture, fears of a double-dip recession, are they receding somewhat?
I don't like to comment on the developed world. I have some thoughts about it, but I don't think for the emerging markets. In fact, I think as long as the problems persist in the developed world, we're going to be sitting in a world of relatively low inflation and low nominal interest rates. And for places like Brazil we just spoke about, or Turkey, historically capital importers, it's a fantastic opportunity to grow. Because they'll be able to attract foreign savings that they haven't at a cost of capital they haven't in decades. So I don't think it's a significant concern for my geographies.
All right, Justin Leverenz, Portfolio Manager, Oppenheimer Funds, joining us. Thank you so much.
Thank you, Mark.
Pleasure to meet you. Thank you, sir.
Nice to meet you.